Hey everybody, good morning. We got Dan, Don, Sergio, Mad, Will, Donald, Craig, Svenborn, David, Scott. Good to see everybody. And we got channel subscribers like Larry, Valerie, Francois, David, Kimberly, my favorite subscriber. She's actually here in the office today. Not in the room, but in the office. Ted, Jason, hey everybody. Buenos dias. Buenos dias, señores and señoritas. Y señorita. Un poquito español. Hey, Rungamer. Good to see you as always. And so, you know, welcome back to the channel. And today I wanted to talk to you about something the mainstream media seems to have maybe misplaced in their story archive. This is kind of like the stock you can never, the sock, the sock that disappears in the dryer, you can never find it. Talking about the unshakable, rock solid, never going down U.S. housing market. So while they've all been busy cheering about how home prices, existing homes still climbing, we're seeing that new home sales actually decline. And we're kind of like in this real estate fairy tale. But here's the thing about fairy tales. They're not real. Maybe based in reality, but not really real. And while everybody's distracted by the pretty castle on the hill, there's a little secret brewing in the dungeon. Let's call this secret foreclosures. You see, the headlines are screaming, everything's awesome. AI's going higher, tariffs no big deal. But a little report came out and just whispered something inconvenient. Turns out that home foreclosures have jumped 11% in July. Just a little bit. Just a little 11% jump. Nothing to see here. No big deal, right? Sure, this will end up well. Move along. And it gets better. We're talking about 36,000 properties that are now on the fast track to becoming somebody else's problem. Or for the savvy investor out there, somebody else's opportunity. Now, if you're living in Nevada, Florida, or Maryland, you might pay a little attention here because these states are leading the charge in the foreclosure parade. And if you're in Houston, Jacksonville, or Las Vegas, well, let's say the music is just getting a little louder. Welcome to the Morning Monster. And so what's causing all this? Minor inconvenience of foreclosures. Well, it's a classic story. As the tale goes, this is old as boy meets girl, but they get they fall in love, they get married, they get a mortgage, an adjustable rate mortgage at that, and fast forward a few years, and that cute little 2.86% interest rate has now blossomed to a beautiful 6.58% monster, and it's kind of like that adorable puppy you adopt, and then it grows into a T-Rex and eats your furniture and your savings account, and now a lot of homeowners are finding themselves in serious underwater conditions on their mortgages. That's a fancy way of saying they owe the bank more than their house is worth because of the interest rates. It's like being in a submarine with the screen door. I'm sure that'll work out well, right? So, every one of these 36,000 foreclosure property filings is a potential deal. A motivated seller, a chance to pick up a property at a fraction of what may have normally cost you a year ago. While everybody else is panicking, we're looking for opportunities. Think about it. We've got people who are desperate to sell, and they're not looking for a bidding war. They're looking for a lifeline. And you could be that lifeline, also getting a fantastic return on your investment if you're in the market to do that kind of thing. So, simple plan, you start by looking at the data. You identify states where these metro areas where foreclosure rates are the highest. You look for properties that are seriously underwater. You find the motivated sellers and you make your move. Now, this isn't about taking advantage of people's misfortune. It's about understanding market cycles. It's about being prepared for the opportunities as they arise. And right now, the opportunities are starting to knock. So while the rest of the world is humming along, the housing market fairy, well, we're the ones sitting here waiting and watching the plot twist. We're going to be the ones who are ready to write their own happy ending. So be careful out there. We're seeing this rise up. This is the first sign of bigger danger in the markets when foreclosures start ramping. So be careful. Be careful. out there. All right. That little foreclosure ramp, not really. I haven't really seen anybody else talking about that at all. At all. So, jumping into everything here and doing pretty good on the 50K challenge here. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. And this presentation is intended to be informational, educational, fun, and entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. You might lose money if you trade them. If you desire personal financial advice, hire and consult a financial advisor. It's not what I do. I don't pretend to be one on YouTube. If you need somebody to be a fiduciary for you, you got to hire one of those. And we had the FOMC minutes come out yesterday. The market just kind of... We've got the Jackson Hole Symposium kicking off today. We got Powell slated to speak tomorrow morning around 10 a.m. Probably right around he'll be kicking it off right around the time we usually wrap up. Should be interesting. Should be interesting. I don't expect him to say much. The only knee-jerk reaction might be if he doesn't support the quarter percentage point cut. That's almost a foregone conclusion in the market. Now, when you look at the interest rate predictions, when he spoke at the FOMC meeting, the market, the futures for rate cuts actually dropped down below a quarter percentage point cut. And then on all the data that's come out the last 2 weeks, we've actually pumped it back up to a 0.5 percentage point cut. Despite, we're seeing weak jobs, all those job loss, or not really job losses, but imaginary job revisions, I guess you might say, in the data that got the BLS person fired. But then we're also seeing unemployment for under 24-year-olds ramp up to 8.1%. And then on the other side, we're seeing the cost for producers go up to 3.3%, which is not acceptable because that's going to trickle into CPI. And we're already seeing Xboxes, PlayStations, other imported electronics types goods start posting higher prices. Microsoft bumped their Xbox price by like $100. PlayStation bumped their PlayStation price by like $50. This doesn't sound too awesome, everybody. Doesn't sound too awesome. And also interesting, we have more big business bankruptcies this year than we've had since 2020 so far. And, looking at where we are at this point in the year, maybe I'll talk about that tomorrow. So we've got the Jackson Hole Symposium kicking off today, rolling through Saturday. Got Fed Chair Powell speaking tomorrow morning, and we'll see what happens. I don't think it's a foregone conclusion on a cut. I don't think it's a foregone conclusion on we've got this inflation. We look at the DGS2, and it's just kind of hanging with the homies, not really going anywhere. Not really going anywhere. If they cut a 0.5 point, that would be right down at the market rate, and the market hiccuping on the treasuries, well, that puts it above, and then they'd be back into rate raises. So I don't think they're going to cut a 0.5 point. Quarter point, maybe. We've been fairly benign since back in March. Haven't really had any big moves in the treasuries. But what if treasury demand plummets and causes the price to go up? These treasury auctions, it's kind of funny. Everybody thinks about an auction, more buyers brings higher prices, but that's not the way treasury auctions work. The less demand there is, the higher the interest rate. So when treasury demand drops, we see higher interest rates. So if the Fed cuts the rate, the Fed doesn't set this rate, the market sets this rate based on demand of treasuries. So if they cut their rates and then the treasury rate pops up through, Fed's going to have to chase. And that's exactly the problem I've been talking about since back here in late 2020, 22, early 2023 when I drew this on the chart. We were back here in like October 22. As we were turning the bottom, I said we'd probably go through a period of sideways. We actually rose much higher than I thought we would. And then we might go through a period of increased inflation and chasing rates higher again. And then a financial crisis. Now, I kind of, time is the hardest part of this whole thing. I just drew these out here, and now we've kind of exceeded the timeline I thought might play out. So, but what's the driver of people pumping money into stablecoins? That's like, there is a base demand for short-term treasuries, but with stablecoins, as long as stablecoin holds the floor. If stablecoin demand goes down, now treasury demand goes down from stablecoins. If stablecoin demand goes up, then treasury demand goes up and prices go down. So it's all kind of interesting. And if you haven't seen the Genius Act video I put out on the channel, maybe go watch that. I did retitle it, so it's more clear where the Genius Act video is. It's under the videos tab on the channel here. And how do we make money today? How do we make money today? Let's take a look, shall we? Get rid of that. Turn that off. Go back up to ES, which is the S&P 500 futures. Let's see. So yesterday we had this kind of bounce. I saw lots of social media posts and other media posts talking about how this was a V-shaped recovery off the drop yesterday. And it suddenly stopped right there at the market close. Sideways overnight and then dropping this morning down to a 618 retrace. You gotta be kidding me. This stuff is magic, right? Like how, just a coincidence we stopped right at the 618 this morning. Now, if we hold here, hold in this box, we go attempt to break through the 30-minute roadmap line right there. And this is ES, this is the S&P 500 futures. Maybe like, why not look at the cash index, JT? Look what happened overnight over here. There is no overnight over here. Like, we have no data after the market closed. So this kind of tells the story. We got this opening in about 2 minutes. And so far, we're hanging in here. If we dip below this level right here, right down around 63.75, more downside to come. Talked about this quite a bit yesterday, how 4-hour roadmap line, right? We found support yesterday there, but we're back into it today. That's a sign, initial sign of weakness. Now, can we build a bounce? Maybe. If we push back down through, that's indicative that maybe we're going to go cruising on down. And this is where it gets scary because the daily is all the way down here. Only like 400 points down. No big deal. No big deal. Yikes. That's a long ways down. Now, I talked about it on the SPX, the cash chart. That here were the levels to watch. Now, these don't line up with futures because there's less price action. So we've got that 4-hour all the way down here. We're on the 4-hour for the futures, 4-hour for the cash index. Considerably lower down here around 61.40. And then we've got the daily right there. And if we go visit the weekly again, where we were Liberation Day, we'd be all the way down here in the low 5,000s. 3-day hanging out right here. So it's climbing the, as we climb the fib ladder, we also decline, drop down through the fib ladder. So we've got we're currently on the 1 hour, 4 hour support right there, 61.75. The daily support right there, 6,000. The 3-day support, got to grab that chart right down here, 5,600. And then the weekly all the way down here. Something just fired off. So there you go. There you go. Now that was what fired off right there. Starbucks. Stopped out. Ugly. So it was a 30-minute bounce and failure right there. Look at that. Epic failure. Popped up and dropped out. Downward pressure this morning. The list incredibly small this morning. There was only, I think I touched my glasses there. Put a big smear right in the middle of my left eye. There were only 27 tickers total. There were only 4 tickers on the gainers list. That's crazy. That's very, very small. Looking through all the different things we look at, like NASDAQ, downward pressure still. Still cooking on the downside. Haven't actually bounced, though. We didn't come down to that support level like we did on the ES, on the S&P. Didn't come into the zone yet. We haven't even poked into the uprights there. This pattern right here, it's a reversal type pattern. Trend was down. We make a move, counter to the trend. We retrace, hold a 618, in between the uprights, which is 50 and 786, but 618 is the ideal place to hit. And this creates at the minimum, a 3-wave type move, which at this point, if we bounce there, it'd put us right here if we're just doing an ABC correction and the trend resumes down. Same thing on ES here. If we bounce here, watch out for resistance right here, and we can resume the trend down. So, trend is down right now on these smaller time frames. On the bigger time frame, though, still rocking and rolling, baby. Even though we've been down a couple days, that's still up. We're still well above the daily roadmap line, so well above. Still pressure to the upside. Still came up shy of the targets. But I'm just warning you, like the support levels can break down and we can change course very quickly, and that's the things to watch. Russell pushing on back down. We'll see what happens here. The support level we got to watch right here at the roadmap line on the daily. Come back into it, get below it. Bottom of the box where we found support so far since May. Right in this area. Get below that, and things can escalate very quickly. And for you asking about IWM, there's IWM, Russell, right there. This is set up somewhat bearish. We came down very aggressively, came back up, and potentially going to go down again. CL, still below the support. This box right here that comes from the May 2023 low. Push below it. We haven't got any continuation yet. We're just kind of like, it's kind of like we jumped in the pool. We're about waist deep. We're like, I don't know if I want to go any deeper yet. Any little hiccup at all can push this right down to the 50s, low 50s, 50, kind of the target down there. And if we do that, we could see a hot war kick off in the Middle East. Don't put it past the people in the Middle East to kick off a nice war to try to get the oil prices back up. First move down, 3-wave retrace, trend, pullback, continuation. Right there. That's the 0 point. That was the A. That was the B. That was the C. Absolutely beautiful correction and continuation lower. Now we may retest before we go down further. Entirely possible there. We'll see what happens. Gold, just kind of taking a pause. A little bit of volatility this morning. Took a big dive about 6:30, came right back up by 8. Pushing a little higher. I'm in the weekly gold rush trade, and I'd love to see higher prices. This looks a little bit like first move, second move. At the minimum, A, B, C could push us right up here, 3,400. And that could happen pretty quickly. Maybe in the next day or so, based on the moves here and the move here. You know, we did that move from the 19th through the 20th, so one day. So we could do this move again in one day, right there. Bitcoin giving it back. Like, we were rallying pretty strong yesterday and pushing it back down to a new retrace. So just like S&P, we have the move up. We've got the retrace. We're pushing the limits of the uprights right there. That reversal zone. If we step below it, odds are we're going to make a new low in this push down correction. We did step all the way down to, jump back up just a little bit, back up to where these two lows hit. Kind of did this head and shoulders thing right here. Where those two lows hit, we did test right back into it. We go back to the bottom, lower low, right down around 111. 111.8. And we could possibly extend this on down to like 110. Right there. So if you're aggressively bullish on Bitcoin, be careful. We might have, especially if you're short term, we could see more softness before this reverses. As long as we're holding a higher low, that's quite bullish. But if we don't hold that higher low, things could accelerate down just a little bit. We could even come all the way back down, retest this trend line that we had going. That'd be down in the 104, 105 area. If you don't know what I'm talking about on the trend line, it's not a big trend line, and trend line analysis is the weakest form of technical analysis. But here we go. We had these lower high, broke through, came back up. We might come down and back test it. And that just happens to be where the daily roadmap line is hanging out too, in that same vicinity. Why the roadmap line? It just works, all right? It's not like I can explain to you why it works. It just works. It's based on Fibonacci, and it just works. It works on all time frames. It just works. So if you want to know more about it, the video that's pinned to the channel homepage, you can watch that. Be a subscriber, click on the link underneath me, go to the channel homepage, watch it, give you the code for free, explain how it works. And if you just want an easy button, throw it on your chart. Links in the description of that video and this video and almost every video that I put out. It's like $5. It's pretty affordable. Ethereum, that was a nice reversal on potentially on Ethereum. But A, B, C, we stopped right in the corrective zone and started pulling back. We did not hit the level I wanted to see for a potential bullish move. Need to hit 44.20. Now, the indication that this might have more downside if we break below that high right there. So far, we're holding on to it. That'd be the level to watch. We came right down to it. We get below it. Indicative that we're going on down. Right there. Right there. indicative we're going on down. Global liquidity, still taking a breather. Back testing the breakout. That's pretty quick. We only spent 1, 2, 3, 4, 5, 6, 7, 8 days above, and now we're back testing. If we can hold on to that breakout, go higher. If we get back below it, we'll probably come back and retest this also. Test this box. Just in case you aren't up on current events, that box kind of comes from the highs we've had coming all the way across here. And this level right here comes from the high we set in July before we did the big freak out last August. And watch the international markets flush out U.S. holdings very quickly. Now, Liberation Day here. YNKD. It's just a good indication of global liquidity. This actually did make a lower low. So this was all one big A, B, C correction right there. The trend was up going into this. Correction. Continuation. But we may need to retest before we can go even higher. Eventually, we'll run this out and do a bigger correction, but probably not. Likely not right now, but maybe. Maybe. We did go higher, so that could have been a continuation of the trend, and the trend's dead now. I don't have a crystal ball that tells me that. I just have tools, math that helps me kind of figure it out. Dollar still kind of churning in the zone. We haven't completed the ABC off the high, the recent high. So we did this drop right here. 3-wave up into a reversal zone. The trend was down, so this is correction, resumption of the trend, except right now we've got A, B, C. If we stop here, it brings some ambiguity because that's 3 up, 3 down. If we get continuation back down to the trend line and a lower low, that's continuation of the trend, the downtrend, and we'll have to look for a new reversal to set up from somewhere down around here or lower. For a long time, I thought this might push into the lower 90s. When I say long time, we've been charting on this for since back here in 23 when we hit the top up here in 22. Been charting on this dropping back down for a while. So look at the Max 7 stuff. Apple holding up pretty well, all things considered. Didn't really get the big flush out. Hadn't really, it's not at all-time highs like Microsoft and Nvidia. It's just kind of hanging out here. And Meta, I guess, too. Amazon rejected the gap fill for the second time. See if we can hold the roadmap line for the second time. If we do, that tips the odds we're going to break through and go higher. New highs on Amazon. If we get below it, it tips the odds we're coming back down to the lows. Right there. And if we just smear it up, you got to be careful. Like that, not a clear indicator if we just start smearing it up right there. Google came up to fill the gap and rejecting back off of it so far. If we just keep hanging right here, we might break out and actually go on higher. 219 would be the upside target. Meta getting hit pretty hard. Retesting the breakouts. Right there. I mean, look where we stopped. It's like, dang, we just got lucky on that target. I mean, I guess there's nothing to this fib stuff, right? Be careful. Be careful, be careful. So if we hold this, we can go higher. Next upside resistance, 839. If we start back down and there's not really a good tell, you kind of look at that. There's like a zone right there that we see that little candle poked all the way down in there. If we start below that zone, probably going to come back to the daily roadmap line. And if we don't hold that, we could see a bigger downside back down near the lows over here. When we were down here, for those of you that are paying attention, I said Meta's probably good for a double. 500 here, and we're only a little better than halfway there. So it still might be good for a double, which would be on up in this area from this price down here. Microsoft not holding on to the 1272 so far, so it looks like we may come back to the 1448 or possibly back to the roadmap line. Be careful. Might have some more downside on Microsoft, or we can come back up and retest that 1618 extension. That was a 62% gain from here in April to here just recently. Probably needs a little bit of retrace. 468, the level to watch. The roadmap line may, by the time these all meet together, maybe up here just above it. So don't expect, I'm not expecting outperformance on Microsoft right now. I'm expecting more of a pullback. NVIDIA, all things considered, we're just hanging out right at that 1272. We still got some upside to go to that 212, 1618. Recovery, baby. Recovery. And Tesla, almost back down to the roadmap line yesterday. Holding so far, but we're back down below that trend line. Get below the roadmap line, probably going down here, lower low than we've had back in June. Just the most likely outcome. Does it have to happen? No. Is it a higher probability to happen once we get below this 300, 310 area? Yes. Higher probability to go dip lower low, and it just takes a penny lower to be a lower low. So don't expect some outperformance down, super bearish. Doesn't have to do that. Just thinking turn and burn higher, even if things look not so great. Netflix, still working on this. A, B, still have that 618 just above us. C, correction. May take a little while, maybe September, possibly even out to October. There's what the last one looked like. That drop came up just shy, bounced up. A, B, C, right there. And strong reaction. So if we get down here, could have another strong upside reaction. Alrighty. Newegg smoking it. Up almost 20 bucks this morning. What the heck? This is a dumpster fire company. Or, as far as managing a stock price goes, they've reverse split multiple times in the last few years. That's not providing shareholder value. All right. Reverse splitting your stock is not providing shareholder value. I would stay far, far away from this. They do not know how to manage a stock price. I keep proving it to you. Boeing, holding up really well, but I expect it to retrace and set up the bigger upside move. Levels to watch, there, and there. It's like 200, 180, and about 165. If we could do that retrace, set a potential bigger upside. LSI Industries, yeah, look at that big. We had this nice pop, but you run the fibs. Here's the high, here's the low. We're in the reversal zone. That could potentially be an A, B, C. Be careful here. It's not convinced me otherwise. If we close above here, I'm not going to be fond of that red candle, but if we close above there, we do set the potential that we're going to go higher to 27. right there. SCSC, scan source. Here's the high, here's the low. You see the same sort of pattern here. A, B, C, question mark. So that's it. That's 4 gainers and decliners. ASML. Love moving all the fib lines. Still grinding at the roadmap line here. We did not hit the 618 yet. That's still a potential A. Yeah. Is this the A, B, and we get to C, or is this A, B, and C, and then we go, higher? I don't know. Starts being a little bit ambiguous. If we can get above the 775 area, probably going to go on up. Maybe as high as 1,000. If we don't get above that, we may come on down in the near term before we find a bottom. That down can take us down to the extremes of the 786 here, back down around 630. That is a very wide range of targets. Be very, very careful playing with that. ETHU, taking a pullback. So my timing to get out up here was pretty impeccable at this point. I do have some positions. I need this kind of price to get out. So watch out for a retrace back down to the roadmap line. As far as what you're watching out for, if we get down there, it could be an opportunity to load up on a bounce. But leverage charts, be careful. Leverage doesn't always represent the underlying and what's going to happen. MSTR, as I keep talking about, we potentially have a little bit further on the downside, but that could be it. Like that might have been it. That might have been, we touched into the target. Holy bananas. Holy cheese and crackers, Batman. A, B, C potential. If we can reverse here, get back above this 400 area, probably going out to new highs for the last, maybe, what is it, this year? Yeah, new highs for this year. Maybe even go test the all-time high. ETHT, 2x, I basically already talked about that on ETHU. App 11. We've tipped the odds. We're going to go on up to 602. But there still exists this potential that we dip back down to the lows. Because that's kind of 3-wave right there. It's not very 5-wavy. You can be like, well, what about that? Proportion is just not great. And it also looks like we're nearing completion here. Like if that's 5 up right there, the first move up, and the last move up at equality, indicating that that's done. So we may see a 618, a 3-wave retrace back down in the vicinity of the 4. And if we do that and hold and turn back higher, then we could look even higher than just this 602 target right there. So you gotta be careful, is what I'm saying. But if we did that, move back down into this vicinity, somewhere back around 316, then we could be looking for a move much more aggressive. Probably up around 1200 on the next move. That'd be pretty wild. That'd be a wave 3, more than likely. If this is the 1, 2, 3, 4, 5 right there, and we get a 3-wave retrace into that vicinity of that 4, that would be a bigger degree 1, bigger degree 2, bigger degree 3, and then we'd probably get a 4 or 5. So that could be pretty wild, right? Going from 320 up to 1200. That could be some life-changing money. Even if you just bought a couple shares. Just buy a couple shares. Set an alert there. Monday. Some Monday. Looks like an ABC to me. A, B, C, right in the zone. If we can find support here. Trend was up. 3-wave correction. Resume the trend. Go higher again. Looking at that from the bigger perspective. Which trend will we resume? So we overlapped. At this point, we've overlapped everything all the way down. So this is more than likely a 5-wave complete into that high. We might go just a bit lower into a 618 retrace. There is some downside left. If we're going to bounce here, that high, this low. So right now we set up the bounce potential for this one pretty crazy too. Up in here. We might have a little more downside. I'm going to set an alert at 150. Might be worth buying a few shares of that. That'd be a pretty crazy move. If it gets bullish, we'd be talking about almost 2,000. Taking your 150 strike, or $150 stock, $130 stock, taking it. I mean, that'd be 1,300% gain on some shares. It's kind of stuff, life-changing money right there. Maybe like, well, what about the stock? You know, can it do that? So its market cap is only 8 billion. Think about this a minute. Market cap of 8 billion. It could go to 16 billion. No big deal. It can go to 32 billion. No big deal. Go to 64 billion. Heck, we can even go to 128 billion. Notice I'm doubling every time. I know I rounded down, but double, 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 double. And we're just at 100 billion. Like, that's nothing in the grand scheme of big companies. Go look over here. These are trillions. Trillion, 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 trillion. You know, we're not even down to 100 billion yet. And we got to go down to the next page. We're not in the, 128 billion. And we'd be in the top 200 companies in the world, but top 200 assets in the world, I guess. But it's going to take a while. That'd be Applied Materials up here. So it's got plenty of room to go that high if things wanted to. So upside potential there. Now, can the business handle that? I don't know. That's a different story. But we could double, double, double. Can get up there pretty, that's reasonable. SN. Shark Ninja. Probably still gunning for that 135 upside. Now, so far, this has only got first move up, retrace. And this one might be good for going on up here. If we're going to be bullish. It'd be a pretty wild upside move. Talking about up to 190. From the current price of 115. Curious here. Beta, look at that beta. Oh my goodness. Woo. Beta of 1 is the S&P 500. That beta, 1.69. It's going to be rich in premium. I'm going to have to do a little more work on that one. That looks pretty bullish. Reddit. Consolidating at the breakout here. Upside targets 269, 308. Duolingo. Probably still working on finishing up that correction. Trend was up. Correction down. Before we can go higher. Coinbase still hunting the roadmap line and that support zone. I don't know if crypto can turn before we do that on Coinbase. Of course, Coinbase, if we're going to be super bullish, won't go that deep and it'll just turn and burn. GILD, watch for that to retrace back to the roadmap line. We're failing to break out, but 124, 128 upside targets. It just may retrace back down here before we come back up here. Still 74% likely to get to there. Walmart's failing to break out, coming back down. We may find support at the roadmap line. Right in here before we can go on up. Same story as GILD. First Solar came up shy of the target. That one could retrace back to the roadmap line before we go again. Circle, still grinding lower. Still expect this to come all the way back down to the IPO. ALC, there you go. Didn't bounce. It's all working on a bigger, this looks like a bigger A, B, C, somewhere down in here. A, B, and we're in the vicinity, I guess you might say, of where we might bounce. Somewhere in there. Ain't it? Ooh, came up, retesting. So we had this gap down here. We gapped up through it, coming back down. We can hold that. Probably gone out to 150. 150. Maybe even 166. XXRP coming on down pretty viciously. ABC corrective puts it there, but that is 2x leverage, and leverage doesn't always follow the pattern, so be careful on that one. Roblox probably coming back to the roadmap line, as I've talked about for a few days now. Then we'll see if we develop something bigger. FUTU, still gunning for the upside, 191. SPXL, we actually poked a higher high, but 210. So this whole thing may top out if we get SPXL up here, possibly up here, 231. Pretty wild ride, but there you go. SPYU still has a ways to go back to all-time high. Cracker Barrel, guess what? A, B, C, probably going to take this down. Just see the pictures of what the new Cracker Barrels look like. It does not look like a country store anymore. It looks like a regular whitewashed restaurant. So disappointing. So disappointing. If you haven't looked at it, you gotta look at it. Turnaround plan, I guess. We'll see. So that was the bottom right there. So first move up, and that didn't really play right there with the correction up. That was the lowest low. First move up, retrace. That's all we got to work with at this point. And that comes in right at the 618 level right there. Confluence. Price move up, retrace there. Oh, I need to go look at that. That's that alert that popped up behind me there is the new credit spread trade I'm working on. Trying to build the alerts for it. It's got an absolutely insane win rate. Absolutely insane. I'll have to show y'all. See if I can find it. No, I'll have to pull it up later. All right. Interesting there. Probably support right there, and that could be a long. And the new Cracker Barrel. Like, I should pull up a picture if I can find it. Let's see. See if I can even find it. Yeah, here you go. Look at this. Whitewashed. They playing freaking ads. There we go. Look at that. All white and clean. They've got booths and a few chairs and tables, but I don't know. I don't know. Maybe it's better. Maybe it's better. I don't know. Updated and in touch with the modern consumer. I don't know. Boring. Exactly. Like I kind of like the old way, but maybe it was dark and dingy and you didn't want to eat there. I don't know. There's a reason they're remodeling. I don't know. A-Lab hitting the targets. Watch the retrace. Be careful out there. Then we can go higher again. CSQ. First move down. Retrace. Right there. ABC. ABC. Right there. And then there's only 4 tickers with my signature setup. Roadmap bounce. Not sure what that one is. Oh, it's going to be the big move, probably, maybe. Let's see, that high, this low. Nope. I have no idea on that one. I have no idea why that made the list. Unless that was the wrong AGI. Let's see. It was the wrong one. There we go. That's the right one. So that high was not the one it picked. It picked this high right here. There's the close above. 28.54 is the target. I have some filters that go into this. You can see it picked that entry right there. Picked it right there. Now, statistically speaking, only 10 trades in the history for this ticker. And you have to fall back on the statistical average. So despite this one only be 70 and 1.6, you have to fall back on the average across tens of thousands of trades, which is 74% likely to hit that target line right at 228.54. And the profit factor of 1.2 right there. DFGR. Here's the high, here's the low. Entry 27.64. MCK. I think I covered that on 30 minutes of awesome, maybe. So it fired off the entry yesterday, 754 target right there. WRB. Pull this back over here. There's the high. Pull this over here. There's the low. Kicked above the 618 and 76.83. There you go. There we go. 34 trades, 88. That one's a pretty smoking hot one right there. Check plus. Check plus. Check plus. That would be one I might consider getting into. 72, 74 entry, 76, 83 exit. Right there. Don't go for more. There you go. Gross. Anyway, before the chat devolves anymore, I think we'll probably wrap this up here in a second with my expectation for today. All the same things, all the same levels. Looking for this to hold here on that 618 retrace of the V bottom from yesterday. Got that move up. We've got that retrace. We're holding so far. We break above. We should be good for at least. And don't go for too crazy. This would be the kind of minimum target. And if we get up here, we tip the odds. We're going back to new highs. So there's your tells, right? 64.20, 64.35. That's a zone where we can still make a lower low. We turn down there. And if we can break above that 64.35 area and actually get above that 40 or 64.60, probably going to go on higher. All new all-time highs yet again. All right. No big deal. I just, just like, oh, gross. Anyway. Luckily, nobody can hear that part and, when they watch it. Anyway. I'll see y'all later. I'll be back again, same bat time, same bat channel tomorrow morning. We'll do it all again. Look for stuff moving, opportunities in the market. I'll be in Discord hanging out with everybody, David and Rob and whoever else. I'll see you guys later. Bye now. Bye for now.